Jean-Paul, great to have you here in my podcast. Today we are talking about mining, mostly about cryptocurrency. And I wanted to invite you because we just spoke already that we met a long time ago in some mining facilities in upstate New York. It must be 2019, 2020 before COVID. And for me, it's very interesting because during this time till now, the US really I think it's just the spot now for mining. The most hash rate is now there meanwhile. And so that's why I invited you, because you're actually operating there. So just tell me something about you, and how you get into Bitcoin mining. And what are you doing right now?
Well, yes, David, it's good to reconnect since New York. It's been a while. It's been a whirlwind for sure. Right now, we are building out in Iowa our mining facilities. We have roughly 59, 60 megawatts by the end of the year, and are rapidly growing with the 5 and 10 megawatt deployments across the state. Mining Store is a vertically integrated developer and operator. So we do all of our own dirt work, our own electrical work, our own container deployments. We don't make our own containers, but our own concrete. And then we run and operate the facilities for clients. We provide hosting and profit sharing agreements to customers who want to get into Bitcoin mining. And we have a little bit of self-mining. And I got into the space when Bitcoin was about $70 a coin. I was in high school. I was like, okay, this Bitcoin thing is going to change the world. And the reason why, and I've talked to people recently, is I'm like, do you know about the Byzantine generals problem? Do you know why it's important that Bitcoin solve this problem? And those people say, no, I have no idea. What do you mean? I've heard Bitcoin, but why is that problem unique? And so for the listeners who don't know about the Byzantine generals problem, it's a way to coordinate trust over basically time, over a scale of people that can't communicate. So the fact of the problem is you have generals that are attacking a city, and they all have to agree to attack the city. But because they're all generals, they can't force the other general to attack. And that's really consensus is what we're getting here. And so if one of them doesn't attack, all the generals die. And Bitcoin mining through proof of work helps solve this Byzantine generals problem, which is a way of scaling trust when you can't force someone to do something. And that crucial unlock for me was wow, it's solving a 400-year-old problem. This coin is $70 a coin. Even though we might not fully understand it, or I might not fully get its implications, it's going to have implications for the whole world and for how we can scale trust without a central party. And that's why I got into Bitcoin, why I'm excited about Bitcoin still today, almost 10 years later, and a little bit more about Mining Store.
Okay, so that means you started because you heard about Bitcoin somewhere on the internet, or?
Yeah, I read an article on TechCrunch, and I was in high school at the time. So I was in school, kind of bored, and it came across my news feed. I was like, what is this? So I first started trying to buy it when it was a little bit before, and I couldn't get an account anywhere because I was actually under 21. I was only 15, 16 years old. So I ended up getting a Mt. Gox account through my mom, and then signing up on Gox and wiring through Dwolla, which was how you would buy Bitcoin back in the day, and getting my first coins there. And then started getting into mining and built my first Ethereum GPU miner, where at that time it was actually Litecoin mining, and my first ASICs with Butterfly Labs.
Okay. So you just literally bought the first Bitcoins, but after you get also excited about the mining after a while, yeah?
Exactly. And I built the first shoebox type miner in my parents' basement. And then from there, we ended up running extra power to the basement. And then it's working. I start the Mining Store. And Mining Store at that time was just a Shopify store. And we started selling GPUs and mainly to clients who wanted to mine Ethereum. And I raised a couple $100,000 from family and friends. And we started mining Ethereum. And when the network launched, so we were mining about 500 Ethereum a day when it started. One of the larger Ethereum miners, about 2% of the network back then. I moved my operation. We built it in Chapel Hill with a friend, and we moved it to Graham, North Carolina, in this old mill. And that's where we mined Ethereum for many years. And it was a great journey. We're selling the Ethereum for $5, $6 to pay for power. But it's the homegrown origin of Mining Store. And now today we have 30 plus employees, 60 megawatts, scaling to hundreds of megawatts, and have a good, really efficient operation.
Great. It's almost like my story, but that was just a little bit later. I think I bought the first Bitcoin on, $400, $500. And also then I think I saw on YouTube something about GPU mining. And then I also started like with a little rig in my room. After I also moved like outside behind the house and tried to get more electricity there. But it was almost like impossible because it was very expensive in our place, like to upgrade to get more electricity than you have. You had to pay like some kind of fees to get a higher amps there. So yeah.
Upgrading your service at your house, it's like a whole experiment, but it's like one of the rites of passage to be a home Bitcoin miner. Now everyone's lottery mining, which is easier, much easier.
Yeah, poor parents, they had to go with it.
Exactly.
Okay. So yeah, great. And as I said, the main topic also should be the focus on the US. And I think after like China banned, I think it was in 2019, there was a ban on mining in China. They had around like 65% of the hash rate. And then they banned the whole thing. And a lot of capacity went at the first time, like I think also to Russia. So I was there also like a lot. But because they were also close, so they just moved all the S9 on the borders. But Russia is like still like sometimes it's allowed, sometimes I prohibit. Like it is like, so I think that's now how everything, for me, it looked like after everything moved to the US. How did you see this transformation, or is it like different way?
Yeah, I would say during that time after China ban, that's when we had the mega US sites. That's when the sites went from small, 5, 10, 20 megawatts was like the biggest sites I had. There was a company called Gigawatt in Washington, where I started exploring and started hosting out there in Oregon with Oregon Mines in Washington State. And they went bankrupt because they had this massive project. They weren't able to get it developed fully on time. So that's where the industry was going. And then you had Marathon with their massive facility in somewhere up north, and then all the public companies. So it was an explosion of hash rate in America and really put the US on the global scale for hash rate.
Yeah, okay. It seems like, it's very professional, because I think here also like Switzerland or like Europe, like Germany, so mining is almost like not possible because of a high electricity rate. And so we do not have like public companies. I think really public companies which are doing mining is mostly all of them in the US.
You're right. And the U.S. investors want to see that U.S.-based entities owning U.S.-based infrastructure. And we've seen that with Bitfarms, with Hive, and other people selling their Paraguay and Argentinian mining facilities. Some people are like Mar are saying, hey, we're diverse, but a lot of groups in the U.S. are sticking solely on U.S. because of some of the regulatory and property rights we have here.
Mm-hmm. Mm-hmm. And how did that change? Like, I mean, I remember like here when we started, like it was almost kind of shady. No one knows. We were in some places after we had to move because people like also the regulation was not there. They don't know what is it. So sometimes we had like to move or it was not regulated. Even for me, like my bank account gets blocked. I had problem with my accountant office, which I had. How was maybe like also how you started and how it changed now, like to the public listed companies?
Yeah, so more around like zoning regulations and with the states and counties, or more of like federal or in kind of like internal? Which one would you like to hear more about?
Well, no, like the federal one, like, yeah.
So federally, when we developed Mining Store, there was not much federal regulation yet. In the U.S., energy is regulated by FERC, and energy is also, in my opinion, using energy is a freedom in America. It's expression of speech. So when you're speaking, that's one of the core principles of the United States. Be able to speak whatever you want. Using energy is the same principle because you're effectively running code, and code is also been determined as speech in the United States.
Okay,
we're expressing it, so they couldn't restrict you from using it. But the counties in the United States, the way it's structured is a state regulation, federal regulation, and county regulation. So the counties are the ones that set the local ordinances, which is, can you build this building here? How loud is it going to be? What type of setbacks do you need? So we were the first ones in Iowa that I'm aware of setting that regulation up with the county and setting up a permits, getting the right permits, and educating them on what it is that we do, how many people we employ, what type of tax are we paying to the counties, and why is it beneficial to build these facilities? And then also ensuring that they know that we're not going to use all your electricity up. We're not going to increase your price of electricity. Why are we not going to do that? Because electricity specifically, unlike other commodities, when you do consume it, it's going to reduce the cost for all of the consumers, right? So when you have a traditional counter to traditional wisdom, Economics 101 teaches students that if demand rises, prices tend to go up. But electricity, like I said, isn't like any other economic market. Most of the costs in the systems are from pushing electrons through the grid, or what we call like variable costs, right? Instead, it's a large cost of the system, the fixed costs, like maintaining the massive transmission line and poles and keeping electricity flowing. So as the system gets old, it's under increasing pressures from all these natural disasters and extreme weather. So as a miner, we said, hey, we're going to make the system more resilient. We're going to make the grid more resilient. And that's when they click for the communities like, okay, I see the value as them as a miner versus they're just going to steal all my electricity and make the prices go up.
So actually that was a little bit in our place, like here in Switzerland, like 5-6 years ago, because we have a lot of hydropower. So we could mine here also because it was not like cheap, like 8-9 cent kilowatt hour. But at this time it was still okay. But there was mostly like the problem, that it was very hard to work like with a electricity provider and everything, because so they could sell their electricity like more expensive to the grid, and they just didn't want to support anything. But this is a kind of sometimes it's hard with such traditional business to negotiate.
Yeah, and it's a constant flux of local politics, federal politics, and the community or state levels. So it's not an easy thing to get right.
Okay. Yeah. So then let's talk about the main topic that people want to know about, profitability and operation, like what is going on right now. So, so let's say, like, how did the mining change since you started, like in your dorm, like in your room, like in terms of efficiency, or like also competition, or like the capital what you need to build up something? Because now, like, I also just made a video. I don't know if it's already online, but for example, I checked, like, is it possible like a GPU mining or something? And almost now at home, it's not possible, like to start anything normal now. Like, can have this, these solo miners, but in general, it's done.
Yeah, I would say mining has obviously evolved. When I was in the industry in the beginning days, the price of that equipment fluctuated a lot more. With creating more volatility and the ability to time the market. And you can actually buy ASICs and have them go up in price. Now, it seems like the price has not accelerated as fast, and the ASIC manufacturers have gotten a much better job at increasing production of the units and continuing to fulfill orders. And the volume of ASICs coming out is consistently growing. So that means you don't have a steep pump in price like we saw in 2017. There's also less ASIC financing that occurs now because of some people that got burned in 2017, 2018, 2019, like NIDIG and those groups who ended up acquiring tens of thousands of ASICs that went underwater because they were bought at too high of a price. So for myself, when it comes to what's changed, is it's the financing for ASICs has kind of dropped off. You can still do home mining, lottery, but you need even like different power voltages. Most of the machines require 277 volts or higher, or 240 volt three-phase. So you can't have single phase of your house and run these machines. So you have to be quality. Yeah, which is good for us, right? Because now it's the customers have to come to us. But most people are investing in mining today because of taxes in the United States. So we have depreciation availability where you can write off the mining investment. And if you have income in another business, you can say, hey, I'm going to invest in miners. That's going to write off some of my taxes in my other business. And then I'm going to make Bitcoin as a yield in return. And still, investors are still returning their capital in 2 to 3 years. So if you invest $1, getting that dollar back in 2 to 3 years. Now it depends on Bitcoin difficulty and if you're holding Bitcoin or if you're selling it every month. And it's also very important to choose an operator who's going to be able to run your machines throughout their full life cycle, and not necessarily just the cheapest group, as we've seen with people going to Russia and then their machines getting seized, or going to other places with not the best communication between technicians and delays on RMA. So there's a lot of things that take into consideration when you're making your mining investment, when you're choosing a partner to run with. But the most important thing is that mining is still profitable. And he's even more profitable if you have another business that you're making cash on, that you're trying to avoid taxes in the US specifically. If you're a European citizen and that you have a different tax resume, that doesn't help as much, but you still can get Bitcoin cheaply.
Okay. So you would say like there is a discount on the mining Bitcoin than buying Bitcoin, huh?
Yes, 100%. You're still mining at a discount, $50,000 to $60,000 if you have energy in the 4.5 to 5 cent rate, even with XPs, S19 XPs. So it's even cheaper with hydro or other more advanced systems.
Okay. Then like, so what are your main? So I guess I know the answer already. But like, what are you mainly using? Like Bitcoin miners, or you also invest in some altcoin miners? What's the experience here, or what would you like to tell people that have no clue what to buy?
A great question. So what we're doing is we're investing in the infrastructure, the transformers, the mining containers, the land, the substation infrastructure that helps run the machines. Our customers will buy Bitcoin miners. They'll buy Litecoin miners. We have Zcash miners. We have KDA miners. So the customers will purchase whatever machines they want, but we do run a variety of equipment and a variety of coins. So it's a great question, but it's really up to the customer. Now, the altcoins are more risky, but they have a higher ROI, than the Bitcoin mining, because Bitcoin mining is done by a lot of large groups that are allocating a lot of capital. And for an individual, you're not going to get rich mining Bitcoin. Not today, but you will be able to make a great return. So if you're an individual and you're trying to make 2, 3, 4x in a year, don't mine Bitcoin. Lottery mine if you want that. That's the only way you can make that type of return. If you want 20% returns a year, 30% returns a year, which is for institutions and investors and companies can be a great return, then mining Bitcoin is a great route.
Yeah. Okay. So in the long term, you should go for Bitcoin. Like if not, you can go for some altcoin, but you have like the risks.
It's for something, the risk point goes away. Like ADA yesterday or last year said, hey, we're out. And we know people that own 30% of the network in mining of that coin. And now their machines are worth, lose tons of value. But for them now, they're like, okay, how do I use this for my taxes? So it's like always this, now how do I spin this for positive?
So I want to focus mostly like in big operations or investors. So for them, it's like better to go for Bitcoin mining. This is also my recommendation, like in the long term,
Yeah, it's going to be more stable, but I do know large investors that are looking for that yield, and they're doing Litecoin mining instead with Litecoin and Dogecoin, or they're doing Zcash mining. And there are some big names in the space that are mining those coins too.
Yeah. Okay. Great. So I think the main part we said already, but what are like the key factors for profitable mining right now?
Your number one factor is going to be your electricity cost. That's everyone knows that, and it makes sense. But the factors that people aren't seeing that they might be missing are uptime, responsiveness of the team, your risk that your machine's going to be yours by the end of the year or in 2 years, that it has a good stable property resume, the tax benefits that can come with mining, and the infrastructure that you're going into. If you're going into infrastructure that's old, that's 5-10 years old, or that is an ant box, for example, that wasn't built the best, you're going to have uptime issues with uptime and heat during the summer. So making sure you're going into new infrastructure that can support your mining wattage, especially on these newer machines. Some of them take so much energy that the older infrastructure can't support it. So you have to throttle them. So it's important that you are aware of how much energy you take, and you use maybe some AI tools to help you calculate what type of host you should select and what type of breakers that host should have, power breakers when running your equipment.
Okay. So the next question was like, but I think you answered almost like, what would you tell someone that goes just simply to like what to mine or ASIC miner value, just calculate like the profit on the electricity price, and so what they need to know additionally what can happen that this is not like the ROI that they get.
So I would say this, it's even the best and the biggest in the space. When they give you a model, some of the manufacturers, they're like, oh, difficulty growth 10% per year. I'm like, that's complete BS. So knowing what difficulty is very important. When you look at ASIC miner value, that's how much you make today. But if Bitcoin goes up to 120,000, if Bitcoin goes down to 105,000, you need to know what that's going to do to your model. If you're mining altcoins, I suggest you sell them on a regular basis. Don't just hold the bag and hope and pray that it's going to go up. That's not an investment. So when you're mining altcoins, you want to sell them every week so you can collect the cash and capture those good returns when they're good, so you can reinvest. But to answer your question, I use the Brains mining calculator. That's what we show our customers. It's the best calculator out there, in my opinion, to go out and calculate the Bitcoin mining profitability. You can set your assumptions, but if you're assuming Bitcoin's going to go up 2% a month, assume difficulty is going to go up something similar. But when you're making that investment, because if you're not assuming that, you're going to have glossy rose-colored glasses, and you're not going to believe the real future of that's going to happen in the previous months. But we've had investors who've made lots of a good return when buying S19s and a good return buying with us, and they can show 200, 300% return. And that's a lot because of timing. Mining, the most important thing about mining is timing and speed to getting your machines running. If you're buying machines, you don't have a place to put them, that's a bad idea. Because those machines, right when you buy them, are going to lose value. So you need to make sure you have a site that's running that you can plug them in at. Because if you get delayed by even 1, 2, or 3 months, your return compared to someone who didn't get delayed could be completely different.
Okay. Okay. So then, in terms of operation, like the last question is what are your personally biggest fuck up that you had with the mining? For example, just for me, I can tell you especially this facility where we met at this in New York. For example, we deployed there. I don't know, 1 or 2 months. We worked there. At the same day, we went back to New York. I think it was 6-hour drive, and then to the plane 7 hours. I was fully jet lagged, sleepy. Opened the phone when I came, when we landed, and I saw all workers down already. They had some problems at the facilities. We could not reach anyone. So we went back the office, organized everything, booked tickets, slept for 2 hours, back to the plane, flight 6 hours, and then 6 hours drive, and we were we were there already. At such things. Do you also have any fuck ups? I guess you have a lot.
Yeah, I mean, as a miner, you definitely skin your knees when you're learning, and that's why it's important if you're into this space to think, oh, I can do this myself, no problem. I'll get you have a lot of learnings. For us specifically, or for me specifically, I would say my biggest learnings have been with choosing the right counterparties. So to your point, in New York, choosing a group, we plug our container in, we run it, we try to remove the container, and they say, no, it's ours. It's a fixture. It's ours. It's in the lease now. It's our container. You just brought it here. We're like, what do you mean? So that happened with my communication with this group in New York, and I had to get the sheriff involved. So my schedule was I brought with the sheriff, break into this facility to get my machines out that were in there, supposedly that they said were theirs. And this was 6 months later. So 6 months of downtime, not running these servers. So they're not very profitable. Then I get one of the machines, and actually the next day, I had my staff still working there. I had to fly to LA. In LA, I got on the Dr. Phil show, and I talked about Bitcoin mining with Dr. Phil, the Dave Daily host. And I brought a machine that I just seized with the sheriff the day before. I didn't make an audience. I seized the miner with the sheriff, but that miner that's on stage with me at Dr. Phil was seized one day before. Because you choose the wrong counterparties in this space, people who don't have integrity, people who are only there for the money or for quick bucks, you're going to get burned. People that might be the lowest price. Well, it's the lowest price because they can't offer good service on a low price. So I would say for me, that's where I learned the most thing is we said, okay, no longer we're going to host other people's power contract. We want to own the whole stack ourselves. And that's where we can optimize. You've seen other people in the industry as well. They try to scale very quickly, use third-party hosts. And because Bitcoin mining is one of those industries where if you miss a day of compute, if you miss an hour of compute, there is impossible to get that compute back. You cannot make up that time ever again. You're never going to get that revenue. So as an operator who's not an A+ operator, you have tons of hours of compute you're losing across your fleet. Is it bad hash boards? Is it bad parts? Is it technicians that are fired and don't show up? Is it the power supply going down? Is it permits getting stopped because you don't have the right permits? And you as a customer are affected by that. So it's very important that the operators that you choose and you go with have years of experience. Because to your point, David, you've learned a lot now. Now you flew back and forth and you're like, oh, now I know how to run the operation. So that's my story about one of the major hookups was choosing the wrong partners and running in those sites that you don't own.
Yeah. I think because like I was now not that much in the business for 2 years now, and now because I'm getting involved more, so I started a little bit to research with the people which I worked with, the companies, and a lot of them, these peoples, I checked now, and their companies, they're all bankruptcy because they offered some hosting, but the problem was they were on some hoster of hoster. Like there were different companies between, and just one company blew off and took everything down. So I think this is a really important point, that you should like own the lowest point like of the site.
Yeah, and let's say you can't own the lowest point, or that's not what you want to do. We work with Mining Store. We consider ourselves the AWS of mining. So we have many brokers who trust us and work with us and build relationships with us, and then they host their clients. There's nothing wrong with that. You have to make sure that your broker you're investing in, or the client host, like Mining Store you're investing in, that they have integrity, that they have a public image in the space, that they have a track record, that they aren't just going to walk away with their machines or go bankrupt the next month. So that's why at Mining Store, we work with some of the best brokers out there and run their servers. And they're going to be more expensive than someone else who might be giving you cheaper rates, but your customers are going to have a better experience with us.
Yeah, okay, great. So let's look a little bit in the future. Like, how do you see technologies? Like, how is it developing? Like the cooling system now, it's a lot of hydro cooling, and what do you think? Like, how is it going? Also, like we have a halving every 4 years. And a lot of people, they even ask like, what's going on when all Bitcoins are mined? What are your looks like in the future? What do you think, what is going on?
Great question. So I think in the future, the hydro machines in immersion are continuing to grow because why? Less maintenance, more efficiency, more density for hash rate in one box. So it's much easier to deploy 1 petahash or 1 exahash in hydro than is air. I'm seeing that the energy markets are starting to become more developed for Bitcoin miners to sell energy back, trade energy, and just really play this other revenue stream that was not there before. So even if the miners aren't profitable mining Bitcoin every day or barely make money, if you can play the energy market, you can actually make a decent amount of money because you can lower your energy price so low. Even though you might only have uptime of 60% a month, but you still make a lot of money on the downtime. So that's the key difference that's happening in this industry. Is you have large facilities that are hydro that are focused on uptime optimization, and you have facilities that are focused on power demand response, is what we call it, making money from the power. It's older machines. So that separation has created unique availability, unique plays, unique investment opportunities in the space. But I still see scale. I still see, Bitcoin mining still the next 10 years plus in this space. I don't see it going to zero Bitcoin, because Bitcoin price will continue to rise as less Bitcoin is coming out, which will make the overall US dollar market cap in this industry continue to grow or stay stable. And right now it's not declining, even though it's halving, it's actually growing because of the price of going up. And we see that every time we have a big upswing, halving, crashing US dollar returns, and then another upswing. We obviously see that cycle continuing, just the nature of the finite supply of money and how we know how much printing there's going to be. This hyperinflation we're entering, the era of the dollar not buying you what it used to, or the euro not buying you what it used to. It's sad, and the only way for people to protect themselves is to mine Bitcoin and buy Bitcoin. And it's really an allocation of energy. As a society, we're saying it's more important and more valuable to invest energy into mining Bitcoin than a house. Like, we're going to spend time as electricians building real human labor, real electricity generated in the economy is going to mining Bitcoin. And that labor could be wiring up a house, could be building a new house for someone. But instead, it's saying it's actually more valuable for me to be doing this work. And that's a huge shift in society, I think, across the board. It's not going to stop.
Yeah, I also don't think so. Okay, great. So, and then there is like the question that is like all over the world, like, or that Bitcoin is like wasting a lot of energy. So for me, this is obvious. Like, miners, they go usually they use the power which is overproduced. They go to the cheapest power. So yeah, what do you see? Like, how is it going there with the renewable energy, or like, as you said, that you use like for stabilization of the grid? What's the direction that you see in that way? And what would you say to someone who says like it uses they always compare, like, I don't know, here was always, it uses the same energy as the Netherlands, or it uses the same energy as, I don't know, like in a country. And most people, they do not understand anything about energy. So they're just reading the headlines and, oh, no, it's bad.
Yeah, great question. So the first thing I'll say is you're saying it's using a lot of energy. And let me just make sure it's clear. One of the laws of thermodynamics is energy cannot be created or destroyed. Right? It must always move through the ecosystem. So energy that we're not using, if it's created, it dissipates in what we call heat. Right? It just goes up in the heat. So it's not necessarily like it didn't get to someone else and we didn't let them charge their toothbrush and now we're affecting their livelihood. We didn't let them work on their laptop. So that's the first thing I'll say. The second thing I'll say is like energy is a very unique commodity. It's the only commodity that I'm aware of that is very, very hard to store. That means when you don't use it now, today you have to, it's gone. Just like handbrake, just like compute, it's gone. So if someone doesn't use the energy, the batteries and storing all this energy for the future, for tomorrow, for a rainy day, it's almost impossible. You can store natural gas, you can store water, you can store oil, you can store corn, you can store soybeans, but you cannot store electricity. One of the interesting studies that the Washington Post just did that came out, what was on the Washington Post, but it came out from another firm, it was about demand growth and energy price. So the country, in the United States, the states with the lowest demand growth, which is California, had the highest price increase of 6 cents per kilowatt hour, where the state with the most growth, which was North Dakota, had a negative 2 cent per kilowatt hour drop. And it goes back to my other comment about the fixed costs associated with a demand system when you build out a transmission system. So the more utilization you can get on that system, the cheaper the price is for everyone. So data centers and AI centers, especially ones that are flexible, we're going to use the power when no one needs it. We're going to use power 2 a.m., 3 a.m., 5 a.m. And when it's at 7 a.m., when everyone turns on their heater and is waking up, we're going to be turning off. And that's it's the age-old comment about Bitcoin mining. But actually, what does it do to the grid? We can see in Iowa, we're running, the grid's about to hit the peak and we turn off. Boom. That is another 4 or 5% of the grid, the local grid, that is no longer required to turn on a coal plant to meet that demand. And instead, they can continue to run with their existing resources. They don't have to turn on what's called a peaker plant. And peaker plants are the most expensive plants to run for consumers. They're the most inefficient plants to run for consumers, and they have the most pollution. Mm-hmm. So you don't want to run a peaker plant. It's better to turn off the load than to have to turn on a peaker plant because the grid, unlike other systems, has to be balanced. Whenever I plug in my computer and I turn on my stove, someone has to generate energy on the other side. And we don't see that as a consumer. So for consumers, I have to say to you is that these fixed infrastructure costs you're already paying for, but the grid isn't fully utilizing them. So it's important you understand that this system is very complex and we've been running it for many years, and that adding these flexible loads is actually the best thing we can do for the grid because it'll help reduce the cost for everyone.
Great. This is actually also my take. But I think this is the most common question, most misunderstanding that is around there outside the mining.
So I'll also mention the most important thing or the why costs of going up in power, especially in the United States and probably Europe as well, is not the generation. There's two main components. We generate the power, then we transmit the power. But because transmission projects and infrastructure projects have gone up in costs, that's why your price of your energy is going up. Not because of the generation, which is where the energy is made. It's actually getting it to the end customer and the regulatory, the permits, the environmental studies, the legal, the cost of labor, cost of wire to get these sites new transmission lines built.
Yeah. So also I once was on a project, but unfortunately it was not developed so they had some windmill, or how is it called in English? Yeah. Big
wind farm.
Or wind farm. And so they also have the problem that usually they cannot always use, or they cannot run these wind farms when there is a wind because there is no need, for example, on the grid. So what they also wanted is to have the mining farms. There's some container along every windmill, so that they can, during this time when they usually need to turn it out of the wind, that they can generate the energy there. And there was would be a split, one part for the mining profit, and the other part is to paying down these windmills faster and also to invest in other renewable energy. So that's the big thing.
It's a huge thing because it helps you get the project started sooner. It helps you cash flow the project faster. And it helps you find stranded projects where the energy isn't getting there because the transmission isn't built out yet.
Yeah.
You can get the money sooner as a project, which helps more renewables be built. So it's a win-win-win across the board.
Yeah. There's also a good documentary online, like about in Africa also. There was one, also like a little one, a private-owned hydro power plant, but they do not have the money to build the grid to the villages. So, yeah, there are like good cases out there.
Exactly.
Okay. So then, what is your so like how your own operation or like your expansion from Mining Store or what you're like currently doing, like how will it be in the future? Is your vision? Like, so what if we make a podcast like in 5 years again? So where are you?
I think for me, my vision for Mining Store is continue to do a two-prong approach, the modular deployments, and then move to bigger sites, 100 megawatt, 200 megawatts, but still having a team that can do 5 megawatts here, 5 megawatts there. The goal is to turn up 10 to 25 megawatts a month and start increasing how many megawatts you're turning on per month. Now, right now we're about, I would say 5 to 7 megawatts a month we turn on, but the goal is that you'll be able to scale so the team can do 50 megawatts a month. So versus a public company, which might right now would do a big site, it would be like, oh, we're doing a 400 megawatt site, but it's going to take a year to build and then turn it all on. And like at the end, our goal is to cash flow faster and to do multiple sites. Now we run and we have a good system to manage a site spread out across multiple areas and regions and our staffing structure and housing structures and on-site development structures. Now it's all about optimization. So I would say in 5 years, Mining Store would have technicians who are very good at fixing machines and working on machines, and maybe even some like robots, right? Some robot technicians that are keeping mines running 24/7 and fixing servers and being on the deployment team and supporting us so we can get a goal of lowering the days it takes for us to deploy a megawatt, and then making sure we're efficient with modular infrastructure so we can turn on and get facilities running faster. So you build the Bitcoin mine, then you build the data center. So you're building maybe both in parallel, but the data center takes 3 or 4 years, where the Bitcoin mine only takes 6 months. So I see that's how miners can work with these large power groups in the future.
Mm-hmm. So you see there is still a capacity around that you can just now like expand. So because usually like it always looked like there are a few of places and everyone jumps on it, want to get it. But it seems like when you can like monthly like 5-6 megawatt roll out. So there is still a lot of opportunities out there.
There's so many opportunities. And I think everyone went for the big stuff, 100, 200, 300 megawatts. That's gone. But there's still lots of 5, 10, 20 megawatts all over the US. That's just there because it's all the infrastructure that's been built for the grid, and it's not being used because they build it because they were funded by the USDA, the US Department of Agriculture in the United States, to go out and build it with cheap money. And they had to build it for the farmers in the area, and they overbuilt it, which is not a problem, but now no one's using it. It's not used. So they have this excess and availability.
Mm-hmm. Okay, great. So then the one last question, it's more personal. I think at the beginning you already talked a little bit about that. So, but what does Bitcoin and mining especially means to you?
Bitcoin mining to me is it's the pure definition of work. It's a definition of work that cannot be cheated by any group or company or government. If you're a government, if you're a citizen, if you're a business, you have to use energy to produce new Bitcoin. There's no cheating it. And that's fundamentally different than the fiat system we live in today, where you can be a consultant and bill the government $1 million for a project and then send it to someone else to do it for 500,000 and take your cut. And you can deliver a report that's generated all by AI, or you can do a project. So physical projects, especially ones that have a base level of energy, it cannot be cheated. I think that's so crucial as we move into this world of AI videos, AI images.
Yeah. Crazy.
That's crazy. Open source reports, right? It's what is real work. And a lot of the white collar labor we do can sound like work. We can talk about work. We can have meetings, but the real work is infrastructure in the ground. Did you build a mile of train line today? Did you ship a car off the production line? Did you use that megawatt of power? Because that real work powers the economy in the local, for example, in Iowa. Us using 1 megawatt of power, that means there's more sales tax to the county for the students to go to school. That means there's more sales tax to the state to build better roads. That means the electricians who are working on the project, now we have to hire one more electrician to work on our site. That means the people providing the breakers, the transformers, the truckers who are trucking miners across the state and across the federal government and plugging them in. Right now, they have more jobs. They have more demand. The people who are delivering gravel and concrete and dirt to these facilities, the people who are buying conduits from and filters from, they are making them in the factories. So the amount of work and labor that goes into producing a physical manifestation of Bitcoin, which is the Bitcoin mine, is why I do it. It's because it shows real impact with real people. And it's not just stuck in the financial credit world of Wall Street or the exchanges where you have tons of leverage and credit. It's real value in getting to real communities.
Mm. Oh, great! Yeah, you sound so passionate. So everything what you want, like what you say about that, I just like really. It's usually because I'm now not involved with a lot of people of mining, and most people do not understand. So it's for me also really nice to hear that, and you're so passionate about that. So I wish you really like all the best luck in your expansion, in all the goals like you want to reach. And so one last thing for someone who wants to get in touch, maybe want to host some miners, like, or to have a bigger, larger amount of miners, like how they can see more about you, how they can know you, how they can get in touch with you.
You can reach out at miningstore.com. We have a get in contact page. You can schedule a call with one of our amazing reps who will help you, walk you through the process, share our programs with you. I'm on Twitter at Baric at Jean-Paul. You can follow me there. Also LinkedIn, connect with there to see some content updates. We're very open. We post pictures of our facilities being built. We post lots of reviews on different machines. We post things about hydro mining and guides to getting hydro started with that, taxes for US citizens, and the best way to navigate that type of landscape. So that's how you get in contact with me. And I really appreciate, David, you letting me come on the show and share more of my passion with your audience.
Yeah. If they're coming from my side, you need to give me a spread about it.
There we go. There goes. Wait. Tell them you're coming. We'll set you guys off.
Yeah. So, I think that's it from my side. So think it's done, or you want to say anything else?
I'll say mine on.
Mine on. Yes, turn on the miners. Great. Thank you so much.
Thanks again, David. Appreciate it.